Yo, 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 what's up, Facebook world? Figured I would come on a little earlier tonight, with it being the first weekend of Sunday night football. Don't want to get in the way of people's football time, so I'll wait just a little bit before we get started. But tonight we'll be talking some homeowners insurance, some must. What you should look for in a policy, what you need on a policy, and some of the optional coverages that I highly recommend. So we'll give it just a few minutes for people to join on, and we will go from there. How's everybody's weekend so far? Have some people joining slowly but surely. Short. They're always too short, Cindy. They're always too short. Hurricane insurance. I don't know if we have to worry about that up here, Mitchell, but I can cover some hurricane insurance. Cool. Well, while Facebook is doing an amazing job of finding people and letting them know that I'm live, I'll go ahead and get started. So if you all have any questions while I'm speaking, please ask. I love interaction, instant message, whatever. Hey, Courtney. So the first thing with a homeowner's policy, the first thing that you should consider, you want to make sure all policies on a homeowner's policy are considered all peril policies. So, all peril policies, what that means everything is going to be covered unless actually stated and listed in the policy. A lot of companies, so State Farm, for example, all of our policies are all peril policies. Not every company is like that. So your alternative would be a named peril policy, which means it's only covered if named. So for example here, we have a microburst. Well, with a named peril policy, more than likely a microburst is not named, so it wouldn't be covered. Whereas with an all peril policy, it would be considered a windstorm covered. So that is the first thing. You want to make sure that your homeowner's insurance policy is an all peril policy. Next, we have, good, I'm excited that you're excited too, Joe. Hey, Mom. The next thing that's a must on a policy, so you want all perils a must, replacement cost. You want to make sure that your policy is a 100% replacement cost policy. And I want to reiterate that, 100% replacement cost. So replacement on your structure, replacement on your contents, replacement everything. A lot of companies are going, in today's world, a lot of insurance companies are trying to save as much money as possible, so they might do a replacement cost on the structure of the house, but your roof, for example, is actual cash value, which all that means is you get a depreciated amount on whatever they have to fix. Same thing with contents. A lot of companies are going to actual cash value, also known as ACV policies on contents. So when you get your homeowner's insurance policy out and you're looking at it, next to where it says coverage A, coverage B, coverage D, it should say replacement costs next to where it says property insurance or contents coverage or structure coverage. So you want to make sure that's on your policy. So all peril, I highly recommend all peril. Replacement cost is a must. I've never given anyone anything other than a replacement cost policy. Next, you have structure coverage. So this is going to structure coverage, coverage A. This is what coverage is. This is what covers the structure of the home. So your house burns down, a tornado comes through, whatever. Structure coverage. It's the actual home itself. Okay. So what most companies do is most companies will cover 20 to 25% on top of the actual coverage that is listed. So for example, if you have a house that's $200,000 and it says coverage A $200,000, Typically, you can take an additional 20% on top of that. So really, your house is covered for $240,000 in case of sudden inflation spikes, worst case scenario, things of that nature. So coverage A, structure coverage. You definitely want replacement on structure coverage. Next, we have dwelling extension. So dwelling extension is going to be anything that's detached from the home, okay? So barns, sheds, a lot of decks are detached from the home, swimming pools. Anything that's detached, you need to have coverage for it. So typically a dwelling extension or detached coverage, structure coverage is 10% of your structure coverage. So if you have $100,000 structure coverage, typically it's 10% of that. So $10,000 for the detached structure. So does all that make sense? Any questions so far? Any questions about all peril, replacement cost, what structure coverage is, dwelling extension? Contents is next. So we can go over contents coverage. So contents coverage, we've got what is in the home or what's in the barn or other structures. Folks we encounter with horrible. Yes, I would have to agree with you, Cindy. It's amazing how many people have actual cash value policies and they don't know it. So you all probably don't know, but Cindy owns a roofing company, so she deals with this firsthand. She deals with when somebody tries to file a claim on a roof. Well, if it's an actual cash value policy, the insurance company is going to pay for the material, but then the insured is actually going to be responsible for the labor cost. So I'm sure that you, Cindy, deal with this every single day of every single week, more than likely. But that's why it's very important to look at your declarations page. I know, the boring thing that no one wants to read, no one wants to look at. But you want to make sure that your policy is replacement. That's definitely, I would reiterate that as much as possible. So, back to contents coverage. Contents, furniture, clothing, appliances, tools, furniture. So if you've got tools in the shed, as long as they're not used for business purposes, okay? So this is one of those things, if you have tools that are used for business purposes, let's say you have a lawnmower and you mow a couple yards on the side, you need that lawnmower to be covered on a business policy. So if you ever had a claim on that mower, your homeowners is not going to cover that because it's used to make money. Very important as well, because a lot of people in today's times have multiple jobs. They do things on the side. So if you do anything on the side, mechanical work, anything, that stuff needs to be covered on a separate policy other than the home, okay? So contents coverage, you also want to make sure that it says replacement cost next to contents, or it's going to be actual cash value, okay? You don't want depreciated amount on your stuff. So what replacement cost means? Replacement means that is, if something happens, we are going to rebuy the stuff in your home for what it costs brand new today to buy. That's all replacement means. Same thing with structure coverage. We're going to rebuild the house for how much it costs today to rebuild. Rebuy the things in it, okay? So, next we have liability, okay? So I'm a firm believer in making sure that you are adequately covered when it comes to carrying liability limits. I recommend a minimum of $1 million on liability with every single homeowner. So if you own a house, I recommend you have $1 million in liability. Really, the difference between $1 million in coverage in liability and $300,000 in liability with State Farm anyways is $40 a year. So for $40 a year, you get $700,000 extra in protection. I highly recommend it because you don't have to be a millionaire to be sued like a millionaire in today's times. We live in a very sue-happy society. A little kid could be riding down the sidewalk on his bicycle, falls and breaks his arm, and next thing you know is little Joe's mom and dad's trying to sue you because somehow it was your fault. It's crazy. So you definitely want $1 million in liability protection, or at a minimum $500,000, but I highly recommend $1 million in liability, okay? So those are going to be your 4 basic coverages that you want to know what they are with a homeowner. So your structure coverage, your detached structure, your contents, and then your liability. Those are the 4 basics that I review with everyone when going over a homeowner's insurance policy. One other one that is definitely an important one is considered loss of use coverage. So loss of use on a policy, all loss of use is when your house were to become unlivable and you have to either stay in a hotel, rent an apartment, whatever, your insurance company is actually going to pay for the additional living expenses. So with this, I would recommend that your loss of use not be limited to a certain dollar amount, and I would make sure that it was at least 12 months long. At State Farm, we have no dollar amount, and we have 24 months of coverage. So, but that's definitely one you want to check on. Some additional coverages that you have to add as endorsements on homeowners policies. And I know homeowners insurance is not the funnest thing to talk about, guys. I really do. But with the earthquakes of, what was it, last weekend when we had the earthquakes in Oklahoma, I got a lot of instant messages, phone calls, text messages like, hey, Michael, am I covered for earthquake? I can't remember. I remember you saying something to me about it, but I honestly don't remember if we added it or not. So that's really what brought this on, talking about this tonight, was what happened last week. It's important for people to know what they have, what's offered to them. So your two additional coverages is going to be backup of water and sewer coverage, which I recommend every single person carry. Outside of a wind and hailstorm, backup of water and sewer coverage is the second most frequent claim I encounter, and they are expensive. If you have a backup of water and sewer claim in a finished basement, I guarantee it's going to cost $6,000 to $10,000 easily. So backup of water and sewer coverage is an additional endorsement that you want to make sure you have. And this is one that a lot of insurance companies I find don't give their policyholders. So you definitely might want to call your agent and be like, hey, Michael, or not Michael, hey, if you want to call me and get a quote, that'd be awesome. But hey, insurance agent, can you make sure I have backup of water and sewer on my policy? And if not, how much would that cost me? Usually it's going to be about $50 a year. So next, the second additional endorsement that is available is earthquake insurance. So earthquake insurance is also about $50 to $100 a year, depending on how big your house is in our area. Very inexpensive in my opinion. So let's say you have a $150,000 house. Well, that's a $150,000 asset, okay? A house is most people's biggest assets. So for $100 a year, you can make sure that if we have an earthquake, the biggest asset you own is covered and protected. To me, that makes total sense. I've had earthquake on my home since I purchased it. It cost me $75 a year. Super inexpensive. If an Oklahoma earthquake or the New Madrid fault goes off and it cracks my foundation and it's a $75,000 fix, I'm covered because I paid $75 a year. Now it's on State Farm instead of on Michael Weaver. So those are the two coverages that are additional that I would definitely call and ask. First of all, see how much it is, see if it's on your policy, and I would recommend adding them, okay? So thank you, Elaine. I appreciate it. We have jewelry and firearms. So this is probably the thing I get asked a ton about. Michael, what would you recommend if I have $3, $4, $5, $10,000 in firearms or jewelry? I recommend putting it on a separate policy, okay? The reason I recommend that is because most additional policies, number one, don't have deductibles tied to them. So if something happens, you're not going to be responsible for a deductible. Two, if something happens, you get to keep your claim-free discount on your homeowner's policy, which is big. Most companies offer a 20 to 25% claim-free discount on homes. So by having your jewelry on a separate rider, it's just going to help you out if you ever have to file a claim. Not to mention the riders actually cover more in most instances. So like a jewelry rider is going to cover a diamond falling out, to your ring getting stolen, to you just losing your ring, to it falling off in a lake. Everything, whereas a homeowner's doesn't cover all of that. So those additional riders are good. What about flood insurance? That is a fantastic question, Courtney. So flood insurance is not offered by insurance providers like State Farm, Allstate Farmers. You actually have to buy flood insurance from the state of Missouri. So there's agents that are licensed with the state of Missouri through FEMA and other flood institutions, And so that's a great question, though. So if you're worried about flood insurance, call somebody. They can definitely reference you to somebody that can help you out and get you teamed up with the state of Missouri in case something ever happens. Flood insurance varies in price as well. So I'm not real familiar with flood insurance. I've only helped a few customers out that have been worried. One of the customers, it cost them $750 a year to have. One was $200. So it varies in price depending on your elevation and where you're at. Great question. I think the last thing that I want to hit on with a homeowner's policy is a deductible. So make sure you know your deductibles. Make sure you understand your deductibles. A lot of companies are going to where they have multiple deductibles. So what I mean by this is you might have one deductible for your typical claim and like a theft claim, but wind and hail deductibles are typically different and higher. For example, you might have a $1,000 all peril deductible with a 1% wind and hail deductible. So most companies, including State Farm, are doing percentage deductibles. So you can do a 0.5%, 1%, 2%. What it is, it's based off of your structure coverage A. So if you have a $200,000 house with a 1% deductible, you have a $2,000 deductible. Okay? So I think that's important to know. A lot of people I've been at, when they see percentage deductibles on a policy, they think that, oh, it's a percentage of my claim. So if I have a $20,000 claim, I'm going to owe 2% of that. No, that's not right. So what is the procedure to determine what has caused a roof failure on a roof that is less than 10 years old? Great question, Bill. So typically what you can do is if you have a leak, you can call. What I recommend my customers do is I recommend them either they call me and I can get them in touch with a reputable roofing company that I trust, or if you know a roofer that's reputable, call him or her, give them a shout, and have them come out. Most will give you a free estimate on the house. They'll tell you, hey, this is what's wrong with it, this is how much it's going to cost, and they'll also tell you whether it's insurance claim worthy or not. So that's a great question. But honestly, Bill, I get claims all the time for roofs that are 3, 4, 5 years old. So just because it's supposed to be a 40 or 50-year roof, with the storms we have in Missouri, it's not surprising that if you do have a leak, it's because of probably one of those things, wind, hail, something of that nature. All right, so to recap, because Sunday Night Football should be coming on here pretty soon. That's why I started a little earlier tonight. So we've got, make sure your policy is an all peril policy, okay? All peril, 100% replacement cost. I cannot emphasize and reiterate this enough. You want a 100% replacement cost policy. You want it. No questions. So those are the two things you want to make sure your policy consists of. All peril, replacement cost. So I do encourage the additional coverages of backup of water and sewer coverage and earthquake coverage. Yes, they do cost you. It's going to cost you about $100 to $150 extra a year. I promise you, if you ever have a claim, you're going to be thanking your insurance agent. I mean, like, thank you so much for talking me into adding it, or thanking me, whatever. Liability coverage, I highly recommend $1 million in liability protection because of the sue happy world we live in. You don't want everything you've worked for to be taken from you because of a freak accident. And those jewelry and firearms, keep them on separate policies. The separate policies are good. $0 deductible, and cover everything you can think of. Have a manageable deductible. Obviously, the higher deductible you have, the lower your premium, but make sure it's manageable. Make sure it's going to fit within your financial situation to where if you have to file a claim, you've got the money in the bank to cover it, okay? So, any questions? Any questions at all? And I guess I should have introduced myself in the beginning, but my name is Michael Weaver, State Farm Insurance Agent. Started doing Sunday Smarts 3 Sundays ago. And the reason for it is this is purely an informational and educational piece. So the first Sunday I did about saving basics. The second Sunday, I talked about, what did I talk about? I talked about, wait just a second, quick question. Items in a detached garage, are they covered under the insurance policy? Items such as a mower, ATV. Great question, Justin. So your mower it should be. Okay, so every insurance company is different. Okay, so I can't speak for all insurance companies, but if it's detached, your coverage, your personal property coverage should cover your mower, tractors, things like that. However, ATVs, golf carts, dune buggies, dirt bikes, things of that nature need to have separate insurance policies on them, okay? With most insurance companies that I know of. So if you have an ATV and you currently don't have an insurance policy on it, it's probably not covered under your homeowner's policy. So, but that second week, debt consolidation, and then this week we're doing homeowners insurance. So feel free to scroll back through my my Facebook feed if you want to watch those videos as well. If you have any questions, thank you guys for your participation. Thank you for your questions. Does anyone else have any questions before I wrap this bad boy up and get some football on? All right, well, no questions are rolling in, so thank you guys very much again. I appreciate you all. I hope you all have a wonderful Sunday evening and a fabulous week. Can't believe it's already September, but fall's fantastic, so I'm a huge fan of fall in Missouri. So thank you guys again. Have a great evening. Go Chiefs.